All right, guys. So I want to pick up from where we left off. If you were watching my previous video, right, I think we did all the way until lesson 1.2, 1.3, right? So I'm gonna share my screen and then we're gonna just kind of go from there. And what we're gonna talk about is that there are two major types of securities. So when a company wants to raise capital, um, what do they got to do? They got to raise money, right? So we're gonna talk about that. Right. So how do they do that? When they're trying to raise money, they could issue stock, which is they're giving companies the chance to buy equities, people the chance to buy equities. Or a second path they could choose is they could issue a bond. A bond is actually the company borrowing money from the public, interestingly enough, right? So they're borrowing money from the public. In other words, that's a debt the company is raising money through, right? So what are the two ways that a company can raise money? Stocks are equities, they're the same, or bonds or debts, those are also the same, right? All right, you guys, let's talk about common stock, right? So common stock represents what? Ownership in the company, right? So that means a share or a portion of ownership or a piece of a corporation. So it's issued by all public corporations. So a share is a portion of ownership. So shareholders, they vote to elect the board of directors. So you guys remember BOD, board of directors, that gives them a say in the company's management without being involved in the day-to-day details of its operation. So they don't get to run the company, but at least they get to vote, right? Fair enough, right? So next part, right? I left, well, I have the notebook, right? But I left you guys some space, right? So I want you to draw out these boxes, right? I want you to draw out a box for issued stock. I want you to draw out a box for unissued stock. Under that, I want you to draw out a box for outstanding stock and then treasury stock. And then above all that, I want you to have authorized stock, right? So let's go ahead and get those definitions down. So authorized stock, what that is the board of directors, they're deciding and then they declare in the corporate charter how many shares they will authorize. So not all authorized shares will become issued. And then we got the issue stock. This is the authorized stock that is sold to investors. And then we have the unissued stock. Some shares may remain unissued, not sold to investors. They are authorized but not sold. So this carries no rights or privilege and is not considered in the company's total capitalization. So this is kind of like a blank check, right? Unissued stock, blank check, it's ready when needed until it is used, it has absolutely no value, right? So another thing about unissued stock is they may reserve these unissued shares for the following purpose. Either one is raising new capital for expansion, two, paying stock dividends, three, exchanging common stock for outstanding convertible bonds or preferred stock, right? So I want you guys to write that out when it comes to the unissued stock. And then scrolling down a little bit, outstanding stock, right? So outstanding stock, guys, what that is all stock that the company had issued or sold that is still currently owned by investors. And then we have treasury stocks, right? This is issue stock that has since been repurchased by the issuing corporation and has absolutely, guys, it has no voting rights and no dividends. So we're going to move on to lesson 1.3, right? So what lesson 1.3, we're going to talk about the different types of common stock. So types of common stocks, they're classified by the size of the corporation. So this is how big the company is, right? So market capitalization, this is testable, guys, is the number of outstanding shares of common stock times current market value or CMV per share, right? The smaller the company is, guys, the more risk for volatility. So companies, they're brand new, they're just starting, it may not last, right? The bigger the company is, the stronger the company is. What we're considering big companies, they're going to fit in what we call a large cap. That means their market capitalization is over 10 billion. These are often called blue chip stocks. And then you have the mid cap, right? This is typically between 2 to 10 billion, right? So again, they're big companies, but they're getting up there. And then you have the smaller companies, which their market capitalization is less than 2 billion. Right. So now we're gonna go into a little bit about penny stocks. Like if you've seen the movie Wolf of Wall Street, then you guys understand penny stocks, right? So what that really is, right? So what penny stocks are, they are considered to be unlisted security trading at least less than $5 per share. So when it comes to this kind of stock, there are a risk disclosure document that is mandatory and must be required before you can make a trade, right? This is considered highly speculative, right? Some rules when it comes to handling or dealing with penny stocks, right? Cold calling rules. Caller has to state that this is a solicitation to buy. So, if you're calling and you're saying this is a solicitation to buy, no one wants business, right? You're spam calling, or you're calling someone. Typically, if they call you, you're hanging up. If they say it's a solicitation to buy, right? You're not interested, right? But in order to sell a penny stock, that's a rule. It has to be done. Second thing is rep must determine suitability. Third, customer must sign and date a suitability statement prior to trade. And fourth, broker dealer must present a disclosure that states name of stock, number of shares purchased, current quote, and amount of commission. Established customers are exempt from the suitability statement, but not disclosures. Um, Again, when it comes to number four, right, it has held account for at least 1 year or has made at least 3 penny stock trades of different issues on different days to qualify for this, right? To be exempt from it. So if they had the account for at least 1 year or they made at least 3 penny stock trades of different issues on different days, then they're exempt. They don't have to present a suitability statement, right? But they still need a disclosure. Monthly statements are sent to customers that when they're purchasing a penny stock. Oops, let's go back. What did I mess up? Let me scroll down. All right, so we're gonna go into lesson 1.4, guys. Make sure you're taking notes, right? So we're gonna talk about the rights of common stockholders. So you have dividends, right? Dividends from common stock, right? So dividends is the company giving you money, so it's a good thing, right? So a corporation can issue dividends as a bonus slash profit sharing to the shareholders. It's paid out quarterly. Is it taxable? Yes, it's new money. So again, this is the company giving you a bonus. They're giving you new money, right? Dividends can be paid in one of 3 ways. The first way is cash dividends. It's paid quarterly, taxed in the year they are distributed, or second, stock dividends, typical of growth companies. So when a company issues a dividend in stock instead of cash, the dividend itself is not taxable, right? So obviously, so dividends that they're issued as stocks, it's not taxable, right? Because it's not cash, right? It's not liquid. However, a new cost basis will impact taxes when shares are sold. Shareholders now owns more shares, but the price of all shares are then reduced. So again, their shares are increased, right? Which is exciting. So either they could get paid a dividend in the form of a cash or in a stock, right? So kind of give you guys an example. If an investor owns 200 shares of XYZ stock at $60 per share, if XYZ declares a 20% dividend, how many shares does this shareholder now have? So how you're going to do this, guys, you're going to take the 200 shares, you're going to multiply that times that 20% dividend, which is going to equal 20 additional shares. So their new total then is going to be 240 shares, right? So when you're looking at stock dividends, and it's a 20% dividend stock that they're getting, then they're going to have a total of 240 shares. Guys, got that? Now, what is the new share, guys? So key, the total value remains the same as before. Since originally had 200 shares at $60, the total value equals 12,000, right? So even though now it's 240, 240 shares, right? The value is still 12,000. So the new value must be 12,000. So if he has 240 shares now, 12,000 divided by 240 shares, so the price of the share now becomes $50 per share, right? Guys, got that? And the last one is going to be product dividends. This is rare. It's not common. It's not, you're really going to see this being offered, but but some companies used to actually give their products as bonuses / dividends, right? Now we're gonna look into DERP, right? So when you're thinking of dividends disbursement dates for stocks, the easy way to remember this is DERP, right? That's the order that's gonna come in. It's gonna come in the order of DERP, right? So we have declaration date that's set by the BOD date dividend declared by board of directors, and then you have the ex dividend date. This is set by the exchanger, the exchange the stock is listed on. It falls on the same day as the record date. So ex dividend and record date, they're typically the same. This will be the first day that new shareholders will purchase the security without the dividend being issued that quarter. And then bonus, right? The price of the stock is reduced by the amount of declared dividend on that day. So 1 day sale, guys. They got 1 day to take advantage of it. If they don't take advantage of it, oh well. And then you got C. C is a record date, right? This is set by the board of directors, right? Which is owner of stock on or before the record date is entitled to receive the dividend. So ex dividend day and record day, they typically fall on the same day. And then the last one is you got the payable day, right? So it's set by the board of directors. This is the date the dividend is paid. Tax of the year it's also distributed. So we're gonna move on to common stockholders, and that's gonna be it for this video. Hop on the next video that I'll post tomorrow for lesson 1.5. But common stockholders, they have the following rights, right? Dividend rights is sharing of profits. It's new money, so it's taxable. So dividend rights means new money, right? So new money means it's taxable. At the discretion of the board of directors, it's not guaranteed. So again, dividends are not guaranteed. It's based on the company. They're doing well. They want to give you that money. You're going to get it, right? Usually issued quarterly, cash or additional stock. So remember, we talked about before that cash or stock, these are common products. Doesn't happen really, but it is a way that you could get a dividend. The second is preemptive rights, which is subscription rights, right? So anti-dilution provision. So if additional shares are authorized in primary market, this allows shareholders to maintain proportionate ownership. It's usually have the opportunity to purchase at a discount, usually 30 days before public offering. So preemptive rights, that means it's something you're subscribing to that you paid for. You're gonna have the access to be able to purchase at a discount price 30 days before the public knows about it. Isn't that awesome? Right. So preemptive rights can be sold in the secondary market. The last one is going to be voting rights. Right. So that's the third rights that common stockholders have. So shareholders, they get the chance to elect the company's board of directors. Shareholders, they get one vote for each common share they own. Most people vote by proxy or absentee. So proxy, if they're not there, they're able to still vote, right? And that's it. That's all I got for you guys. Yeah, comment if you want access to the material, right? So let me stop my share. Comment if you want access to that material, right? I could definitely make sure you have access to it. I do have a course. If you want to have access to that course too, comment and you'll have access to it. That's all I got. Thank you guys. Bye.